Good morning, good afternoon, good evening, and welcome to IORadio with your hosts, Adam and Sal.
Hi, everyone.
Today, we're going to talk about something that's in the news that is the next big thing in the world of crypto. And of course, what are we talking about? I don't know. If you look at your watch, it's going to change. But today, it's the ETF, or the ETP is what it's technically, this exchange-traded product that the SEC has approved, this spot Bitcoin thingamajig or whatever it is. And we're going to talk about what it is, how it got passed, and what does it actually mean. There's a lot of interesting narratives that are floating around in mainstream media, many of which are not accurate. So we're going to break this down and share with you what we've learned about this and whether or not this means this is the greatest thing ever for crypto.
All right, let's get into it.
Sal, you've done most of your major research for this, so I'm going to mainly just ask you questions and act like the normal dumbass that I am. And
Sure.
What exactly this is? It was everybody was saying crypto ETF, Bitcoin ETF, Bitcoin ETF. What is it that they're actually trying to get approved?
Yeah, well, there's a class of investments known as exchange-traded products, and people have been trying to get an ETF for Bitcoin approved for a long time. And recently, I think it was a few years ago, the SEC approved a commodity futures Bitcoin ETF. And these investment products allow people to essentially buy passive investments. That's what these exchange traded products are supposed to be. Instead of buying a single share in a company, in the case of an ETF, you can buy almost like a fractional share of every company in the S&P 500.
Right.
So you're buying an exchange rather than a specific stock. But of course, there are also these exchange traded products of which ETFs are a part, but there are ones based on commodities like gold. And so what people have been trying to do is say, hey, listen, Bitcoin is just like gold. It's digital gold. So we should have not only a Bitcoin futures ETF, but a Bitcoin spot ETF, which tracks the market price of Bitcoin.
My impression of an ETF is a scenario where instead of buying an interest in a particular company and following that company, you're buying an interest in a particular category or an entire industry. So an ETF for, say, the Standard & Poor's 500 represents fractional shares in every major stock that's in the first X of, the S&P 500 or whatever. So what I don't understand is if a Bitcoin ETF, there's only one Bitcoin, right? So how is it different from just buying Bitcoin?
Yeah, well, I guess these products, they provide some services for you. So you don't have to actually go out and buy the Bitcoin yourself. What you can do is you can buy, through your brokerage, whoever that is, maybe it's Robinhood, maybe it's Questrade, you buy this product, and then the people who are running that service, they then go and buy the underlying, or they have a custodian that goes and buys the underlying asset, which in this case is Bitcoin.
Okay,
so it is different in that it provides an easier way for people to invest in Bitcoin.
Gotcha. So it's a proxy for actually owning Bitcoin. Ironically, these crypto people who say not your keys, not your coins. This is exactly the opposite. You're not even holding the Bitcoin yourself. You're entrusting a whole bunch of third parties, in this case, whoever's managing the ETP, and then whoever's the custodian that's negotiated with them, and presumably plenty of other things. So this is, it seems to me, it's like a connection where the crypto industry can tap into the traditional finance industry, and all these middlemen basically are just going to get a whole bunch of extra fees out of it.
Correct, yes.
So this basically allows everyday people to have exposure to Bitcoin's chaotic market without having to deal with private keys and public keys and wallets and that kind of stuff.
Yeah, and it makes it more attractive to pension funds and other organizations that have a lot of money to invest.
Well, remains to be seen how attractive it's going to be to anybody who's competent in terms of investing.
Well, here's the question that you need to ask yourself right now is, how much do I trust my fund manager? Because if somebody could potentially be bribed to, let's say, put, 3, 4, 5% of the fund's assets into that ETF, you might be taking a haircut pretty soon.
Yeah. Yeah, I think this is one of the ironies because I did a little bit of research into this ETP, and I read the terms of service for, I guess it's BlackRock's ETP.
Sure.
And this idea that, okay, I can buy into Bitcoin, but I don't have to deal with owning it and controlling it because it is one of these kinds of things where if you click on the wrong thing, all your crypto can be drained from you by somebody 1,000 miles away while you're sleeping. But if you read the terms of service of the ETPs by these companies, the same liability still exists. Instead of you being custodian of the crypto, they and their middlemen are custodians. And if something happens to that crypto, since there's no take backsies, that affects the fund. So you're still vulnerable. I guess maybe the advantage is you assume that BlackRock and Coinbase are a little bit more capable of not getting scammed. I don't know.
Yeah, I mean, there might be insurance implications. I don't know, maybe you could have this stuff insured. I'm not sure.
Well, the terms clearly say that things can happen, mistakes can be made, market manipulation, crypto can be stolen, and it may affect the value of the fund. So,
okay. Disclaimer, big disclaimer.
Okay, so tell us what's happened. What has, because there's been chatter over and over about this ETF is going to be approved. It's going to be approved, and I'm going to say ETF or ETP. We know it's an ETP. It's not an ETF, and we'll go into details as to what the difference is there, based on one of the SEC people's explanation. But there was talk, right, that it was going to be approved and this was going to make the difference. What actually has happened?
Really, what happened is there was a proposal that went in I think it was sometime in July by iShares, and they were proposing this Bitcoin ETF. But what has happened through that approval process, which has been extended several times, is there's been a court case, and the court case has decided that the futures ETF, since the SEC approved a futures ETF, which is kind of like buying Bitcoin, except you're not buying Bitcoin, you're actually buying you're speculating on the price in the future of Bitcoin, essentially. But anyway, since they had approved this exchange traded product for Bitcoin futures ETFs, they said that, listen, you can't discriminate against a spot ETF because you have to treat like products alike. Gotcha. And so this decision was handed down by the DC Circuit Court, and that's the decision that the SEC is referencing when they're making their decision, when they release their decision on the 10th of January.
So do you feel that they should have never approved the futures ETF?
Yeah, I mean, I think people who are listening to this are probably fairly familiar with my perspective, which is that Bitcoin is an investment fraud. It's not a commodity. So absolutely not. That futures ETF is predicated on the idea that Bitcoin is a commodity, gotcha, which it is not.
Okay. All right. So where are we at now?
Well, so the decision came down by the SEC, like I said, on the 10th of January, and it was voted. They approved these proposed rule changes that make these exchange-traded products possible. So the exchange-traded product, the decision about it was released by the SEC on the 10th of January, and they approved the creation of these products. 3 voted for, 2 voted against. Gensler, Pierce, and Uyeda voted to approve the proposed rule changes, and Crenshaw and Lizarraga, and I apologize if I'm not pronouncing this correctly, they voted against it.
If you look on your screen, I should have it on there, right?
Yeah, so you can see there who voted for it. So essentially, I believe all commissioners vote at the same time. I'm not exactly aware of what the specific process is, but ultimately Gensler, who is the commissioner, voted to approve it. I would actually say that he holds the lion's share of the responsibility for this decision, since it would have been 2 against 2, and he's essentially casting the deciding vote.
Although, right, we don't know
altogether.
We don't know who was the last vote, whether there was a deciding vote. What we do know is 3-2. So, first off, this notion that the United States approves of crypto is not completely true. What we had was the SEC was forced by the court to move on this. So they held a vote, and there's 5 commissioners. 3 of them voted yes, 2 of them voted no. So it was just barely an approval. And we'll get into the contention there a little bit later on. What we do know is that Gary Gensler has been a kind of a crypto bro. He actually taught a crypto class at MIT, which is really funny. You can find it online if you want to, because there's a video of his class where he, on the first day of class, the students come in and he's like, how many of you guys know about blockchain? And people raise their hand. He goes, okay, well, you probably know more than I do.
And I've spent a lifetime around the world of finance and money and public policy. And I've been at MIT this last 8 months, and we're going to learn a lot together about blockchain and money. We're going to have a little bit of fun here and see what we're going to do. So we're talking about blockchain and money. That's where we are. By the way, I do cold call. I do call on you. So if you want to leave now, I understand. Because I want to have an interaction a little bit about it. So my first question for the class, for everyone, whether registered or not, how many of you have ever owned a cryptocurrency? Wait, let's see. The odds, it seems like it's about 45% of you or so. All right, so it gives me, Ilan, you want to keep your hand up long? You know what I mean? And how many of you have ever worked on any blockchain-related projects in an entrepreneurial setting or corporate setting anywhere? All right, good. So about a third in the room. Good. All right. So you all know probably more than I do.
Amazing.
Or something to that effect. Literally, like this is in the first day of class, he's teaching this class and he admits that some of the students might know more than he does. So that's who you've got heading the SEC that just approved this thing.
Yeah, and I think Gensler, if I had to speculate as to his position, I think he views Bitcoin as a legitimate investment vehicle. Yes, there are lots of scams. Yes, it might be volatile or it might be risky, but in the end, Bitcoin itself is a commodity and it's a totally legitimate thing. And I think that's where we would differ from his opinion.
Right. There's obviously a lot of argument about this. And a lot of people in the industry feel this is a scam, and some people feel this is just, we should let businesses try this, and if they do screw up, then we'll go after them. So this is what we've got. We've got now this Bitcoin ETP, and I guess this is going to pave the way for a whole bunch of these, right?
Yeah, absolutely. And there's some interesting implications, which I think we can talk about when we can go through a bit of the approval letter by the SEC. We can go over one of the dissenting opinions from the commissioner from Crenshaw,
right,
who wrote an excellent dissent. And I would highly recommend everyone go and read it.
Yeah, well, we'll read it. We'll read a good bit of it here.
Let's go to the approval. Yeah, let's go to the approval 3499-306. And in this letter on the third page, I believe it's the third page under discussion and commission findings.
Okay.
I mean, there's a lot of boilerplate at the beginning, but the discussion and commission findings, after careful review, the commission finds that the proposals are consistent with the Exchange Act and rules and regulations thereunder applicable to a national securities exchange. Go down to the next page. In particular, the Commission finds that the proposals are consistent with Section 6B5 of the Exchange Act, which requires, among other things, that the exchange's rules be designed to prevent fraudulent and manipulative acts and practices, and, in general, to protect investors and the public interest. And with Section 11A 1C3 of the Exchange Act, which sets forth Congress's finding that it is in the public interest and appropriate for the protection of investors and the maintenance of fair and orderly markets to assure the availability to brokers, dealers, and investors of information with respect to quotations for and transactions in securities. So this is essentially the approval. And the argument here in this decision is that the approval of Bitcoin spot ETFs are consistent with the SEC's mandate to prevent fraudulent and manipulative acts and practices.
Okay, so I take it from our discussions, you don't feel that this is consistent, but they obviously did, or at least 3 of the 5 felt that this ETF had adequate, investor protections, right?
Yeah, generally, I would say legitimizing investment fraud isn't a good way of protecting the public.
Gotcha.
But you know, I'm old fashioned, so.
Okay, so what we've learned here is that this is not the SEC or the government saying Bitcoin is here to stay and Bitcoin is going to be the future and Bitcoin is even worthy of investment. It just means that certain technical requirements, 3 of the 5 people on the board feel it is met, so they've approved it. Now, we've talked about this. We've talked about what the rationale was. You know, you seem to feel that there's some corruption in the SEC and that these people are selling out to special interests. And I see both sides. I can see, obviously, there's some people in the SEC that are on board with this and some people that aren't.
Well, let me clarify that, because I have no evidence that anyone in the SEC has a beneficial financial interest in Bitcoin or cryptocurrency. And that's certainly not what I mean. What I do mean is that, and maybe I'll clarify here, that the SEC has a specific mandate. And the most important part of their mandate, like there's just tons of pages of regulations and rules, but like at the very top, the most important thing is what we just read, which is to protect the public.
Right.
To protect the public from fraud, from manipulative acts. And if the commission is passing decisions which aren't aligned with that goal, I mean, you can use whatever word you want for it. Now, that being said, the commission does do a lot of good work. They do protect investors. They have brought motions or whatever you want to call it.
Right. We can look at the press releases.
Cryptocurrency. Yeah. So they do a lot of work there, but this is a huge deal, I think, in that it's almost like an Alan Greenspan moment for Gensler, because what he's done is he's introduced what is essentially a toxic security and a fraudulent security into the economic system, and nothing might happen. It's possible no one invests in these products, but it certainly creates the potential for systemic issues.
Right. Okay. So let's stop right there. I don't disagree with you, but I think this is a similar argument to like Coinbase saying, the SEC approved our SPAC, our public offering. Therefore, that means that our business is legitimate. And I think there's a difference between meeting the minimum technical requirements and condoning a particular business model. Now, I recognize that both you and I feel, and we can prove it with tons of evidence, that the entirety of the crypto market is basically fraud and deception. But obviously, these people are still willing to entertain the possibility that somewhere in there's some legitimate speculative business that can happen. I don't know. So
yeah, well, like if an institution is its people and there are 5 commissioners, and we know that Pierce, who was appointed by Trump, I mean, I'm fairly confident that if you looked into the financials, there's probably some connection. I mean, this is speculative. It's not a statement of fact, but I would suspect that perhaps there is some kind of connection with the crypto industry, at least in terms of lobbying, which is legal, of course. So, are all the commissioners representing the public interests? Well, maybe some of them are operating under like really grave misapprehensions about what Bitcoin and crypto is, which I think Gensler is. So the reasons why, I'm sure that we don't know. All we can say is that in this case, they made a decision and it's the wrong decision.
Right. Well, in your opinion, it's the wrong decision.
Yeah, in my opinion.
I mean, I just don't want to I don't want us to be too preachy. I mean, we're pretty preachy already, but I also want to, and also in fairness, some of the people that voted in favor of this were appointed by Biden. So it's not just Trump people or this or that. But I don't know. It's one of the things I wanted to say was, I don't think we should call this the SEC decision. It should be these 3 people that approve this, like if the approval of, and if a bunch of money gets lost because of this, it should be like Gensler, Pierce, and whatchamacallit,
like the opposite of Glass-Steagall sort of thing.
Yeah.
The
Graham Leach Bliley.
Yeah, exactly. All right. I'm down with that. Let's start that.
What we're talking about here is Gary Gensler, Pierce, and Lizarraga.
Yeah. So I know, UADA.
Ueda. Okay. So Gensler, Pierce, and Ueda are the three that approved it. So if this thing, it turns into a flaming dumpster fire, we blame Gensler, Pierce, and Ueda.
There we go. GPU. Perfect.
The GPU approval.
So we talked about the fact that it's been approved, but I think the reason why they approved it, why they went ahead, and how they justify their decision is very interesting. Because according to the approval letter, and this is under Section A of the Exchange Act section on page 4, Bitcoin-based exchange-traded products can meet the obligation under Exchange Act Section 6B5 that its rules be designed to prevent fraudulent and manipulative acts and practices is by demonstrating that the exchange has a comprehensive surveillance sharing agreement with a regulated market of significant size related to the underlying or reference Bitcoin assets. And so let me translate for you. What the SEC is saying is that because the Bitcoin futures ETF has been approved and operates under the Chicago Mercantile Exchange, because the CME has surveillance sharing agreements with some crypto exchanges based in the United States, that means there's enough protection and enough guarantees against fraud for a spot Bitcoin ETF approval.
Gotcha.
And so that's what they're saying. That's their rationale.
Okay. So I've got some theories. You've got some theories. Let's read Caroline Crenshaw's statement. Let's talk about the fact that not everybody at the SEC was in favor of this. And one of the commissioners actually wrote a pretty good dissent. I won't read the whole thing, but I do think some of it is definitely worth touching on. So let me read this. So Sal, you basically feel they should never have approved this. This is not consistent with their mandate of protecting investors, right?
Yeah, that's absolutely correct.
And to back that up, let's read the statement from Caroline Crenshaw. So it's dated January 10th, and she says, "Today, the Securities and Exchange Commission approved a series of proposed rule changes that will allow for the listing and trading of Bitcoin-based products on national exchanges. These commission actions are unsound and ahistorical, and worse, they put us on a wayward path that could further sacrifice investor protection. I cannot agree that these actions serve either our statutory or foundational investor protection mandates, and as such, I dissent from today's order." Now, it doesn't get much more, contentious than that, right?
Yeah, I mean, that is as polite a fuck you as you can write.
And so she's clearly saying that this decision goes clearly against the mandates of the SEC. So I think it's unfair to say the SEC approved this. It was a majority vote by 3 people that approved this.
Well, the institution is its people, so the SEC did approve it. It's not to say that there wasn't dissent or disagreement within the agency.
Right. Okay. So we want to definitely note that. So if you haven't read this thing, and I'll put a link to it in the description of the video, but it's a 3 or 4 page statement, and it's got a lot of really great footnotes in it.
But her thrust is there's lots of fraud and manipulation in Bitcoin. There's evidence for that. There's historical evidence. There's academic papers that have been written about it. There's wash trading. Mm-hmm. There's concentrated ownership. And fundamentally, there's a few problems here. One is that the way that they've justified the approval is to say that because there's a surveillance sharing agreement with crypto exchanges for the futures ETF.
So the global spot markets underlying the Bitcoin ETPs are marred by fraud and manipulation, concentrated and without adequate oversight. So basically, there's no way they can guarantee the market is not manipulated because they just don't have the control over it. Now, some of the people, as you inferred earlier, are arguing they will have some ability to monitor these markets, but the general consensus among the critics is not enough. So there's just lots of fraud and manipulation. And every time one of these Bitcoin exchanges, we get a look underneath the hood, we find out there's just tremendous amounts of wash trading and market manipulation.
Yeah, I think the assumption is that because there's a correlation between markets, that the surveillance of one market will provide information about the other market. But the question that isn't being asked by the SEC in their decision is the original surveillance adequate? Or rather, they've asked the question and they've answered it, and they've sort of chosen an answer they like as opposed to reality. So in the article, so in Crenshaw's decision, she has basically 5 or 6 points. And so, she says, first, today we are creating a new standard, but it is not clear exactly what the standard is. Never before have we found that a proposed rule change satisfied Section 6b-5 obligations because of purported correlation between two markets. So she's saying this is an entirely new standard we've created that probably doesn't make any sense. Second, the correlation argument does not make sense. Even if we could detect manipulation or fraud on the spot market because of perfect correlation with the surveilled CME, what could we do about it? As discussed, much of the global spot market is altogether unregulated. That cannot be the basis for our investor protection findings. Third, even assuming the argument did make sense, the Commission's analysis relies on questionable data for a subset of selected spot Bitcoin markets to examine the relationship between prices in the CME Bitcoin futures market and the spot Bitcoin market, but does not explain why such a subset is representative of the entirety of the spot markets worldwide. Fourth, the order draws questionable conclusions from that questionable data. Fifth, the Commission's analysis reveals that the percentage of correlation between the relevant markets consistently decreases as the time intervals get shorter, but many, if not most, market manipulation schemes happen only in matters of minutes. Finally, the correlation between two variables in the past does not necessarily mean those variables will continue to have a correlational relationship in the future. So essentially, she is eviscerating the SEC's main premise for their approval.
Mm-hmm. And I think this is really interesting because just yesterday, Molly White produced a video where she summarized what was going on in the SEC and the other cases against Binance. And one of the things that court case revealed was that these exchanges had their own market makers that were actually owned by the same people. So you had the trading exchange, and then you had these so-called independent entities that were hooked into the exchange that were supposed to be there to facilitate trading and to make sure that if somebody wanted to buy something, they had something to sell. And they were all owned by the same interests. So we have overwhelming evidence that that's going on. So how can there not be market manipulation?
Well, yeah, I mean, and how can you trust these exchanges? If it's working like that with one exchange, what are the guarantees that other exchanges, whether they're in the U.S. or not?
It was the same way with FTX, though. FTX had Alameda Research. Alameda was supposed to be independent, and they were
Correct.
they were market makers too. And in the case of Binance CZ owned 2 other companies that were market makers that were trading back and forth. In addition to them having their own in-house trading going on that they weren't telling anybody.
Yeah, and so what are the guarantees that these exchanges that are providing the quote-unquote surveillance data aren't doing the same thing? If they're providing the information to the Chicago Mercantile Exchange, the CME, what guarantees are that that data isn't manipulated to begin with? Is the CME inside of the exchange systems doing audits? I don't think so. So how exactly is this relevant to preventing fraud or even detecting it?
Okay, so before we get into speculating on where we think this is going to go, what has happened since the approval? Is today the first day of trading that opens up after they approved it?
There's a Bitcoin here. Let me send you a link. 1 second. Let me find this garbage. So you're wondering who's invested how much. Well, Grayscale is at the top there because obviously that was already an investment instrument that they've converted.
Oh, this is a list of the
ETF.
people who have bought shares of the ETF?
Or rather, the list of the ETFs and how much money so far is in them. So we can see that, there's a lot of them haven't probably opened up to investment yet. Or they haven't reported how much money is being invested. So we're just at the beginning.
Okay, so I find this confusing because I'm familiar with the Grayscale Bitcoin Trust. They were just buying up Bitcoin and they were creating a trust of it. So now they've converted this over to a spot product, right?
I believe so. Yes.
Okay. Look at that fee, 1.5%. That's pretty.
Yeah, that's
hefty.
why people are saying they're going to get fucked because nobody's going to want to invest in that.
Okay, so let's speculate on where we think this is going to go. Now, I know you're just really upset and disgusted that this was approved in the first place, right?
Yeah, well, I think it's dangerous. I think it doesn't protect investors at all. It puts them at risk, puts probably the broader economy at risk. Of course, that's going to depend on how much this stuff gets connected to the real economy, how many funds are going to invest money. So that remains to be seen, but it certainly is a danger. Okay,
so the question is, why would the SEC approve this? Are they really that convinced there's some legitimacy here and they're wrong, or is there some other reason? Because I have my own theory, right? My theory is that they're tired of being taken to court and arguing over this, and maybe there was some mistakes made early on approving this futures one, but it might be easier for them to just give these guys a green light, which then gives them a little bit more latitude to go in here and monitor what's going on in these crypto things and shut them down more efficiently.
Yeah, I mean, it seems like a really weak argument because, of course, it would be better not to have any of this at all. But as Crenshaw pointed out, the court decision from the DC Circuit Court is wrong because, of course, Crenshaw's argument is that, listen, futures-based ETF is not the same kind of product as a spot Bitcoin ETF. They're entirely different products. So the ruling that you treat like products alike does not apply. So even though the premise of why the SEC is making this decision is sort of irrelevant, then you get into the idea that, well, they are also making an assumption that these markets are surveilled adequately and that they can detect fraud in any meaningful way. And when we investigate that and the reasons why the SEC makes that claim, we see that there's nothing there. Like, it's based on this idea that the crypto exchanges connected to the Chicago Mercantile Exchange are providing good data, but there's no real mechanisms to ensure that, like you said, they don't have other firms that are market makers, that they're providing good data, that they're not colluding between themselves, or that they're not even ingesting data from other foreign markets that maybe have really obvious manipulation going on. There's no way to get visibility into this. Yeah. For adequate market surveillance. So that also doesn't make sense. So why the SEC would have made this decision when they could have simply issued a denial with a broader explanation, and potentially if that was, overruled or challenged, they could have appealed. Why they didn't go down that road, I think Crenshaw is taking it. She's not saying it, but she's taking a pretty dim view. I mean, she's pretty explicit.
Right.
This is in violation of the SEC's mandate. Now, why the decision was made by those three commissioners, I mean, they know that. Gensler really just repeats what's in the SEC approval. Ueda, who also approved it, brings up some reservations, even though he approved it. And of course, Pierce is just a cheerleader. She sort of was like, rah, 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 Bitcoin, all the way. So I'm not sure that we can make statements, other than speculation about why they approved it. Mm-hmm. Just think it's bad.
Yeah, I recognize that we're in an environment now where there's a lot of emphasis on letting corporations have the freedom to screw things up, and then we take action after the fact. It seems like the mandate of really being proactive has kind of been shoved to the side, and when you put people in industry that are friends of industry more than they are objective gatekeepers, you got a problem. So we're going to see what's going to happen with this. My theory is that this is going to just flounder, but I'm hopeful that if one good thing comes out of this, it's going to be that the government has a lot more interest in taking a very close look at what's going on with these crypto companies, and especially companies like Tether, because it's hard to, not police this it's hard to police this market if you don't have a really good eye on what's going on with some of these stable coins and the fact that none of them have been formally audited.
Yeah. I think it's also interesting, Crenshaw mentioned this, the precedent. And so this is really interesting because actually what the SEC has said is that you can have a Dogecoin ETF. In fact, you could make your own coin and call it, Gensler coin and submit an application for an ETF as long as it's a proof of work cryptocurrency where you have to expend energy or some kind of resource to generate it. It's technically a commodity.
I don't get that.
So it's the same. It's no different. So, all these cryptos that are proof of work are built off of Bitcoin. They're all designed in the same way. So Dogecoin, like fundamentally, okay, there's some difference in terms of the protocol, but fundamentally it's the same, quote unquote asset.
Are you suggesting though that because I know that in the Binance case, the authorities said that they listed a bunch of coins that they considered securities, and then American exchanges like Robinhood just delisted them because they didn't want to be caught doing unlicensed securities. Was that based on whether they were proof of work or proof of stake?
That I have no idea. But what I can tell you is that a proof of work cryptocurrency is not fundamentally different to Bitcoin. So what would be the SEC's justification in denying a Dogecoin ETF where they approved a Bitcoin ETF?
Okay, I don't know either, but I don't know if it has something to do. I don't know if it has mainly to do with proof of work. I think
it might just be arbitrary. It might be an arbitrary decision by the CFTC that says Bitcoin is as a commodity and Dogecoin isn't. But I think that can probably be challenged as well because again, you have to treat like product alike.
Right. I think we both agree that calling any of them a commodity and not a security was a mistake.
Yeah, but if you take their internal logic to, the nth degree, it becomes obvious how ridiculous this is.
Mm-hmm. All right, well, we'll see what happens with it. Okay, so Sal and I recorded this a couple of days ago, and a couple of days have passed, and I wanted to do a short little update on what's happened with these ETPs/ETFs since then. Now, admittedly, both Sal and I we're no experts on the inner workings of how these things work. And there's definitely a lot of questions that we have. And we're just going to, rather than try to speculate too much on what's causing what, I'm just going to share with you some of the concerns that I have about these ETPs. And as always, it's like we're going to continue to gather information. So here is what we've got so far. Now that the gate has been opened on these instruments, you're seeing all these other companies in the traditional finance, BlackRock and Fidelity and Grayscale. Grayscale has converted their Bitcoin trust over to the spot Bitcoin ETF. BlackRock has their iShares, iBit. So you can see they look like they're all different prices for these things, even though they're supposed to be tied to the price of Bitcoin. And the reason for that is because apparently each fund has its own different way of fractionally representing its shares versus the value of Bitcoin. So if we look at iBit, here is the graph of iBit. It's currently at $22.84 a share. So this is BlackRock's ETP. And then here's ARK's ETP. And you'll notice they're very similar, except the prices are different. One of them is $40 a share. One of them is $22 a share. This is where you got to dive deep into each of the prospectuses and documentation on these shares to find out how they work. And do you really want to do that? I don't know, but you should if you're thinking about buying into any of this stuff. There's all kinds of fees involved and all of that. But anyway, what we do know is that the price of Bitcoin has gone down since these things have been approved. And everybody thought it was going to cause this huge rally and everybody was going to be buying into it. So the question is, why is the price going down if these ETFs are accumulating Bitcoin and they're just getting started? That's a good question. Where is their Bitcoin coming from? That's another good question. I don't know the answer to that. Maybe it can be found if you dive into some of the SEC filings and how they propose they're going to operate their fund and then look into their prospectus and the details. And I think each one might be a little bit different, which is one of the things that I think is kind of sketchy and shady. We don't really know. Are they when a fund acquires Bitcoin, are they getting it in the open market, or are they making deals with exchanges and whales and selling large amounts of crypto off the market so it doesn't affect the price? Who knows? So, but you would think with these funds acquiring Bitcoin, the price of Bitcoin would at least stay stable. Why is it going down? Good question. This is just more of the weird, shady stuff that just doesn't seem to make sense in this market, right? So a couple of other things worth considering. And there's an article here on The Motley Fool about these ETFs and how risky they actually are. And there's 2 points that they make here. One of which is what they're calling tracking error. They've demonstrated that some of these ETFs don't always show the exact same price of Bitcoin. Again, is there a standard by which everybody agrees this is the current price of Bitcoin at a given moment? Most of these exchanges are largely unregulated, and they're in this gray area. We don't really know how much liquidity is in any of these markets, and we don't know what the basis of the price is. We're just going on what Coinbase or Binance or Bitfinex says, or Kraken says, here's the price of Bitcoin. But we don't really know for sure how much of that is a result of arbitrage trading by automated bots. We don't know how much of it is phony money. You know, this is one of those big things. This market is nowhere near as transparent as traditional stock markets. There's nowhere near as much oversight. And this is a huge, huge concern. So, again, a lot of weird issues with that. Another thing that's a problem is custodial risk. And I had talked about this before. So the notion of buying into one of these funds is supposed to be so you don't have to worry about holding Bitcoin yourself. It's being custodied by these firms or third parties that they're using. But you're still subject to the same liability if something happens to these custodians. They can have their Bitcoin stolen. They can accidentally send it to an improper address. They could lose their keys. You know, there's a lot of different things that can happen with these intangible digital assets. And this is what's so weird, because if you own shares in a real company, your shares just can't disappear because you clicked on the wrong thing in an email. So even though you may not be holding the Bitcoin, whoever is holding the Bitcoin is still undertaking some risk. And if they screw up, you're the one that's going to lose. The fund is going to be devalued by the amount of those losses. So again, it just doesn't really seem to make sense why anybody would buy into these. This is just a device for the crypto industry to get desperately needed liquidity from the traditional finance industry. The question is, are people going to fall for it or not? We hope not. And if you have more information on these individual funds and how they're doing their trading and what their basis for pricing is, please share with us, leave some comments, and we'll continue this discussion and see what comes of these new crypto ETFs. So, as always, thanks for tuning in. Be sure to visit our website, IORadio.org, and subscribe to us at YouTube/American Scream Video. And we're on all the other major podcast platforms. We appreciate everybody tuning in. We do not have a Patreon. Our channels are not monetized. So we don't really see any profit from this. We're just trying to spread the word, and we thank you guys for your support. All right, that's it.